Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Assume nothing. In any kind of relationship, we can make the assumption that others know what we think. And we don't have to say what we want. We assume they are going to do what we want because they know us so well. If they don't do what we want, we feel hurt and we think, how could you do that? You should know. Bottom line, folks, get rid of that grayness. Keep it black and white. It's a lot easier. Market-wise, let's take a look at it out here. We had the Dow Industrials up 59, NASDAQ up 6, S&P's up 6.5, gold contract down $18, trading at $1,649 an ounce. Silver down $1.13 at $29.98 an ounce. Platinum off 40 bucks at $1,550 an ounce. Copper down 6.5 pennies at $3.53 a pound. Light sweet crude flat at $89.30 a barrel. Bonds flat at $146.15. King dollar 79.31. She's flat. She also rejected the lower price today, as she did yesterday, folks. Dollar wants to go topside. Euro up 15 ticks, trading out at 132.42. The yen is at 84.41. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we got a cash S&P. It's up $5. What we did out here, we got down to 1435. Closed at 1440. We did 681 million versus 750. The way this is right back inside the larger range again. And what that's saying is that, you know, we get the triple witching tomorrow, get a couple days next week. This is going to go after that 1448 again. That spike that we got up there, that's what it looks like it's going to go after. That's on your S&P. Dow Industrials, and particularly what you have here, folks, is that they're going to be able to push the market any way they want to push the market after tomorrow. Tomorrow's going to be interesting, but Dow Industrials did the same thing. Now, the Dow is not in the higher range. The Dow in the higher range was 3,329. But what you did do, you basically rejected lower price, which is 13,216. We did lie to volume, so it's like that also wants to go test out that 13,365 again. NASDAQ Composite. We go over to the Composite. Now, the Composite had never come back inside the range. What the Composite did is this. This is where this gets deviant, though. What the Composite did is this. She got down to 3034, rejected that price, and hung out here at 3050. We did volume of 1.7 versus 1.9. The difference in the Composite is that the way this little baby is set up is that the Composite, because it was above the range already, it's like, okay, now, did you go to lower price and reject that, or are you pushing into price and you can't handle it? And, you know, that's a toss-up at this point because it was it stayed in the higher range. Now, I'm going to go back over these, and what I want to show you is this. So, the deviance inside the marketplace is relative right now, big time, because this is what we did. On Monday, we took out the small swing highs from the 11th, 12th, and 13th of December. We took them out on volume. What we didn't do is that all the indices are going into the 19th of October. Some of them are going into the 7th of November as well. We're coming into that even with the volume, with dramatically lighter volume. On the NYSE, you're talking about 800 million versus 1.2 million. And the NASDAQ, you're talking about, the NASDAQ's not as dramatic. The NASDAQ, we're talking about 2 billion versus 2.2. But so the larger issue is still that you have a much larger downdraft versus this updraft. Okay, so in that context, what would you want to look at next? Well, you know, bottom line is that you want to go look at the dollar. The reason being is that we've been talking about the disconnect in the marketplace, and what the disconnect specifically has been is that the dollar has gone down, commodities have gone down, gold and silver got smoked. Very unusual. One of them is going to be right. Okay? I suspect it's the dollar, and this is why. Because what has happened is that when the dollar index was backing down, it was backing down on lighter volume, where gold was backing down on monster volume. So what does the dollar index do today? We get to a price point of 79.06, rejected the lower price, closed at 79.31. All of the above, dollar wants to go higher. Now let's go over to the gold contract. We take a look at gold. What we have with gold, she gets slammed. She went from a price point, she got down to 1636. Had volume 175,000 contracts. This is problematic big time. You get expansion of contracts as we're going lower. And it's not done yet, folks, okay? We got down to that 1636 out here today, but this thing looks to me like it's even wants to try to get into this, yeah, she'll test 1636, but 1600, 15, in the 15s is still game. If we go over to the GLD, what you're going to see is this. The GLD, the A to B equals C to D on a one-to-one basis was 158. We hit 158.39. What ended up happening? The GLD had monster volume again, 24 million shares. We had broken the B point with 24 million shares. We got another 24 million shares. This GLD, you got to remember something. On an ABC structure, you can do a one-to-one, meaning if you go down 10 points the first time, you go down 10 points the second time. Well, what happens is that the ratio, the way the ratio goes, you can do 1-to-1, you can do a 1 to 1.382, you can do a 1 to 1.50, or a 1 to 1.618. What that means specifically is that the first leg is $10, the second leg could be $13.18. The first leg could be $10. If you do a 1 to 1.50, it could be $15. The 1 to 1.618, you can do $10 the first time, and you can do $16.18. The next time. Now, if you ever do, when you do a 1 to 1.618, folks, that's an immediate change of trend in the marketplace, whether that's up or down. What gold loves to do is a 1 to 1.50, up and down. So it's problematic in a big way. We've been talking about the aspect that, John Paulson basically is the largest holder here. This is big, big dollars. When you're talking about, in the course of 2 days, we've gone down $6, and we are talking, let's see, 1 second, wrong one. I do it this way. Okay, GLD. When you see the amount of shares that you're talking, and I'm not even talking about, I'm just talking about the last 2 days. Yeah, $6, 21 million shares. You're talking real money here, real money. And the pressure. My point is that when you look at the end of the year coming, when both he has an Advantage fund and an Advantage Plus fund, and he's had some problems in the funds, meaning losing quite a bit of money the last few years. This is huge pressure on the fund to liquidate, and when it does happen, we won't see that for the end of December. We don't get those numbers until the middle of February. But bottom line is that my take is that as this goes down, that's getting squeezed. That's the first part. The second part is that the dollar has come back, lighter volume, dollar wants to go topside. Now, let's go over to the bond market. We take a look at bonds. So, bond market out here has come back dramatically too, by the way. Bond market, we are at 146.16, and we got to a low of 145.19, which was on Monday. Okay? What I expect you're going to see out here is that that's going to get tested. We did 369,000 contracts out here today. That's not really a lot. The bond market to get to higher price has to do about 500,000 or 600,000 contracts. Now, a couple news items out here today. The biggest one, folks, is that ICE, which is an electronic derivative exchange, is buying the New York Stock Exchange. The amazing part here, inside this context, by the way, too, is that there hasn't been a huge amount of flack. If you remember the huge amount of flack when the NASDAQ was taking it over, okay? They didn't talk about losing jobs and all that. The floor of the New York Stock Exchange, folks, is done. It's done. It's over, okay? They're going to try to basically say it's not. It's over. You stay right there, folks. This is Tom O'Brien. This is TFNN. We'll come right back.